Yeah.
Namaskar. Hello and welcome to P Guru's channel. I'm your host Sri Iyer. Welcome to the markets of last week, DGI episode 366. And joining me is the co-host of this program, Sridhar Chityala. Sridharji, Namaskar and welcome to P Guru's channel.
Namaskar. Good morning, good evening to everybody, and looking forward to talking about what's happening in the markets.
Sridharji, today we are not only going to talk about markets, but we are also going to examine the main reasons for the inflation in the United States. And viewers, there is a surprise there for you. So we do request you to wait till that section comes up. And also we'll take a look at how the markets may behave next week. So here we go, sir. I'm going to put the charts for the equities. Take it away, sir.
Great. I think the equities markets, as is often the case, witnessed volatility through the week. It was up. It made up close to 1,600 points on Thursday before it slid on Friday on fears of two things. One is rising inflation numbers, which we will discuss in the later half of the program. And then the other sentiments being that there is now clear fears of recession. So all the three markets, the Dow, the S&P, and the NASDAQ was down. And that what you see is probably pre-market numbers of the US in the Euro and in Asia, but already the futures in those two markets are pointing to a downward number based on the US markets.
And now let's take a look at bonds, Sridharji.
Well, the bonds, you remember the last week we saw the 10-year dip below 4%, but now with the inflation numbers, there's almost a certainty that a 75 basis points hike would happen. And so the 10-year US T-bonds went past the 4%. The bond saw a slight dip, but you will see that again, rising in the next, when the markets open there. The Japanese 10-year also has risen as a result of the same epidemic that is felt in the US market. All central banks coordinate. So when the US banks, US Fed raises rates, you will see the rest of the markets follow the pattern.
And now let's take a look at bonds. We have all the data this time, Sridharji. We cleaned it up as well as getting all the numbers, 6 months all the way to the last number. So here is the second slide, sir. We can talk to this one now.
Well, I think that what is conspicuous, you can say everything is up, right? Because the first week of November, so 6 months is up. 6 months is at generating an yield of 4.322%. Remember, this was kind of less than 50 basis points, almost, less than 12 months ago. So if you are in fixed in, if you're looking for yield, the best place to go is the US T bonds, and you will generate a very, very strong yield in the market based on what the Fed is likely to do. 3 years, 5 years, all numbers up, including the 10-year. The 30-year number, which you may not see it, the 30-year number, you can see that there is around 3.994%. What did this do? This pushed the mortgage rates in the US market. The 30-year fixed interest mortgage is the most popular, and that's now gone past 7%. Okay, it was around 6.67, 6.7%, but it's now gone past 7%. Again, this particular rate you will begin to see right around all the Western markets, be it Europe, be it UK, be it Japan, be it Australia. Clearly, the mortgage rates have risen up. This is one of the other drivers of inflation, both rent as well as the amount of money that people shell out to pay their mortgage interest.
Look at the oil market, Sridharji, and oil appears to be down this week, sir.
Yes, the oil markets were down. Complete your thought, Sriji.
So when we say oil, viewers, I mean, sometimes we miss this. It is the West Texas Intermediate, but this is going to be important for India, as Sridharji has explained in our previous episodes. Please go ahead, sir.
Well, I think the energy markets or the oil markets dipped 3% this week. Why? Because of the fears that there is an imminent recession and a slowing demand. So there's no point in already fears of a recession. And again, when we look at the inflation numbers, the prices, hence they feel that keeping the prices up is basically going to hurt their own demand. Hence, you witnessed a dip to almost close to 3% this particular week, which is actually one way it is a good news. The other way is probably a bad news, basically because this will again be felt through the economic system.
And now let's take a look at currencies, how various currencies are doing. Of course, everybody looks at how they fare up against the US dollar. Sridharji.
Yes, the US dollar is the only thing that is rising and rising and rising. So, with the US dollar rising, all other currencies went on a tailspin. And most notably, the Japanese yen is the lowest in 32 years. It's almost close to 150 Japanese yen to $1. So therefore, that's an astonishing number compared to $135 that we saw, not 135 yen that we saw recently. Renminbi is not spared. The euro continues to slide. It is at below dollar. British pound, which has been taking a pounding as a result of all the turmoil in this industry, that has also dipped to 1.11. And the euro GBP is actually below, $1 euro. So therefore, you can begin to see the Aussie dollar. There's no exception to the currencies. The only good news is the US dollar rising. All other currencies taking a depreciative position relative to US dollar purely because of the rates and the market and the economy being of what size it is, the US economy this is.
And now let's take a look at commodities. Gold will be of interest to a lot of people of Indian origin because we cherish gold like anything else, like nothing else. Sridharji, take it away, sir.
Well, I wish I can say that you hit the bottom, so you please buy at 1650. But no, I think it'll continue to slide, depending on. So there is a dollar. The rise of the dollar means death knell for gold. The money shifts from gold towards the US dollar as a currency to commodity kind of a swap. So you are now beginning to see gold, which was not too far ago around 1750, has now dipped to 1650 with more than 2 to 3 rate hikes imminent in the next 3-4 months. Gold will continue to slide, so will be silver. Copper is also sliding. It is down 1%. If you recall, we again reported last week the copper was sliding. Again, recessionary fears and less demand in the commodities segment, in the precious metal segments of the market.
Sir, agricultural prices, these were expected to go up because of the fact that there is a war, and yet I see the opposite happening. Sridharji, perhaps you can rid us of this puzzle.
Well, I think again, there's two reasons. One reason is that, remember, this is down relative to the peak that we achieved in November and December. But actually, when you go back to 1 year, they are still very much about 20 to 30% up where we were relative to 1 year ago. These slide in numbers that you are seeing is relative to what happened between February, March last year to November, and then between February to November this year, and then February to November last year, and November to now in the current year. What happened in February? We began to see some pressures. The market came down. Then we finished reasonably well the year. Then came the February to March Ukraine war in 2022. Then the prices shot up because of the supply chain issues and the logistics issues. And then once the deal was announced, the prices began to normalize. And what you are now seeing is prices relative to the post-Russia-Ukraine war situation. So therefore, that's why it is showing a negative number relative to that. But if you really go back to more than a year, you see that these prices are up around 20 to 30% relative to that baseline number, Sriji.
Sridharji, this is all futures, right? Because I see a bracket and a date after that.
Yes, these are all futures currently trading at the December 22 delivery. Currently.
Yes.
So therefore, that's December 22 delivery. Yeah.
Yeah. And a couple more that overlap into the next, float into the next feature, wheat and
Yes.
corn. Wheat should be
India,
very important, isn't it? Because wheat is where both Ukraine and Russia are number one and number two for the world, if I remember correctly.
correct, correct. You are absolutely correct. Well, India made a killing. If you remember that when the wheat prices went to $1,400, India made a killing and sold 7 million tons or some huge number relative to a very modest 1 million, which they used to sell annually. But now the price relative to $1,400, it has come down to $861. But the base price is again around $640, $700. When you still compare the $700, it's $861. These prices are moderating purely because there may not be enough demand due to the recessionary kind of headlines that people are beginning to see, as well as the inbuilt inflation and people trying to distribute their precious money across various categories of expenses. So, hence, you are seeing these numbers, but all this could change in the next 2-3 months as supplies get more impacted as a result of the war. As far as the next one, which is crypto, people said, crypto is dead. Well, it continues to hang around. The Bitcoin is at less than $20,000. Ethereum was $1,500, $1,700, $1,800. Is hanging around the $1,300. Crypto is here to stay. Whether people like it, accept it, believe it, there is a small segment of the market which will allocate 1 to 3% of their capital to these alternate assets. So it's hanging in there. Whether it'll go to $30,000, $40,000, well, when you have a very strong US dollar generating a strong yield, you would not shift your money towards the speculative currency.
And now let us take a look at the Indian rupee. This has become important because of the rapid slide that Indian rupee is experiencing. However, with respect to other currencies, I believe that the Indian rupee has been much more measured. Sridharji, I think it's because India was buying up dollars, or no, I should say selling dollars. I don't know what exactly they do to shore up the price. You can explain it, sir.
So India was spending its precious, reserves. It has spent close to $100 billion to shore up the prices because how do you prevent a downward slide when you have more people to buy? The central bank buys. No different to the Japanese yen. So Japanese yen was crossing 150. The central bank of Japan intervened to prevent it sliding above 150 to a US dollar. So central banks intervene so that there is enough, or at least there is enough people on the demand side to mitigate the depreciation of their respective currencies. It'll be interesting to see if you can go to the next chart. Yes, on a 5-day basis, it's a 0.59 basis points. On a 1-month basis, it's 3.63% up. On a 1-year basis, it is about 9.79% relative to the current price. It is up 9.79%. When you look at this, is what India is trying to tell the world. When you look at the other currencies, they are, north of 15% and north of 20%. So relatively speaking, India is okay, but there's nothing that one can do when on a ratcheting up US dollar, unless you spend precious reserves to stall it. There's no way by which you can stop the US currency from going up with imminent rise in interest rates.
And now let's take a look at the US Consumer Price Index, because what we are going to come up now is the section that Sridharji talked about, that is inflation. Where is the inflation coming from? And we have a surprise for you. Sridharji, please take it away, sir.
Great. Well, I call it as the Biden inflation chart. Okay. So Biden took charge. Okay. When he took charge, you can see at the end of 2020, when President Trump was completing his term, the interest rate was below 2%. Okay. Or the inflation, I'm sorry, not interest rate. The core inflation, not the core inflation, the consumer price index was down below 2%. You can see the astronomical rise of the inflation numbers on a month-over-month basis relative to month-over-month and year-over-year. It is 8.2%. The September inflation number is 8.2%, which is one of the reasons why the markets kind of gyrated downwards as a result of this sustained inflation that one has seen on a month-over-month basis. The core inflation that you don't see here is actually risen to a 40-year high in United States to 6.5%. The core inflation includes the food. The core inflation doesn't include the food and energy prices. It excludes, and that is also at 6.5%. As far as the core inflation is concerned, Fed uses 2% as the benchmark for it before it raises interest rates. For a sustained period of time, it did not raise rates as the inflation well went past the 2%. This is the criticism that the Fed is saying. So clearly, Mr. Biden, whether he accepts or not, has witnessed, a precipitous rise, which is causing a lot of anxiety amongst people, which may eventually put United States into recession.
And now we are, drum roll please, and we're going to look at the US inflation surprise. Everybody thought that it would be because of energy that there is inflation in the United States, but the numbers suggest otherwise. Sridharji.
Yes. So the numbers are very well broken down. If you look at the energy prices, it's at the headline number is 19.8% in the month, September inflation, which simply says that energy prices seems to have stabilized. Okay, that comprises of, including the gasoline of all types, is around the 19.8%, and where is the inflation coming from? The inflation is coming from food at work or school. What is food at work or school? The food that is purchased and packaged and given to people, very similar to food at home, which is what you buy as a grocery that you consume at home. So when you look at food at home, it's 13%. When you look at food at work or school, it's at 91.4%. When you look at the airfare increases, it's at 43%. When you look at the utility prices, it is at 33%. This is what the Europe is witnessing in terms of their utilities, energy, the cost of the energy. Then looking at the basic items, you can see the prices have skyrocketed, excluding energy, which if you factor in at 19.8%, a lot of the other drivers have come from other things like public utilities, healthcare, health insurance, food at work, airfares for people to travel, even butter and margarine, the price has increased by over 30%. So this generally tells you that this probably varies from country to country, but broadly the trend would remain the same, consistent with variations, consistent with the respective consumption patterns in the respective country. If we go to the next slide, okay, all items less food and energy. Okay, this is the core inflation that we talked about, 6.5, 6.6%. If you exclude food and energy, the inflation is at 6.6%. You can begin to see the breakup of these various items. Okay, Medicare, 6.5%, beverages, apparels, daycare, major appliances, etc. Some of those items which are discretionary expenses like your computers and car rentals and all those kinds of things did see contraction in prices. That is why those industries are witnessing contraction in demand. So it gives you a good breakdown of the inflation numbers, core inflation versus consumer price index. Core inflation excludes the food and energy. Consumer price index includes a broad basket of currencies. So if you take a look at India, it may have a different basket. But core inflation is a common parameter, irrespective of which part of the world you are in terms of measuring inflation.
Sir, one quick look at that, and it appears that Apple stock, maybe Samsung, because smartphone is one of its gold stock, like LG, all these people are now going to be under pressure in the next few months.
Tremendous pressure. You
Is
will
it a
see
good time to buy
money.
Apple? I'm just wondering. Don't say yes or no. People should make up their own mind. Sorry, sir. I was.
Yes, people should make up their own mind. You're right. Certainly, I would not touch companies which are manufacturing and selling computers. It is not in the totem pole in terms of the purchasing priority of an individual. If you're in healthcare services, you better buy because the prices are kind of going up. By the way, just for you mean to give you an indicator that if you are in Social Security, that is the pension in United States, we are going to have a highest increase in a long period of time. The Social Security is going to be increased to 8.3%. So everybody
Wow.
is going to get a jump in 2023. But hold your breath because you're on one side they will increase, on the other side they'll take it away because your healthcare costs, Medicare costs get deducted. Please go back and look at those Medicare costs. That's number one line item in the core inflation number. So all they're doing is robbing Peter to pay Paul, if I have to use that phrase. So they're basically giving you a number to self-justify themselves. Next year, no, the healthcare
There it
number
is.
is
Health insurance is 28.2%.
exactly.
Sridharji, this is going to be a pain. I'm only getting older. I mean, I guess it's true for all of us, but anyway, so it's a whammy. That's all I can say. Sridharji, now let's take a look at the markets for next week. Also, tell us a little bit about how things are going to change with Xi Jinping back for another 5 years. What is the news that you have got from China? You have a very close ear to the ground there. So please tell us what's happening.
As far as to wrap up the markets, 60 more companies in the S&P. Last week we saw JP Morgan, Morgan Stanley, Citibank, Wells Fargo report their numbers. So this week we're going to see Goldman and other institutions, 60 more companies reporting numbers, including Tesla. The trend, two in financial institutions, two institutions stand out. That'll stand out. One is JP Morgan and second is Goldman. So you will begin to see some, uptick numbers from Goldman Sachs. I can't predict Tesla, but I will not be surprised if Tesla does report positive numbers based on some of the data that I have seen. But let's wait and see. As far as the other companies are concerned, they're all going to report a slide in numbers. Is one of the reasons why Amazon stock, relative to others, has been taking a big hit because of the increase in prices, therefore decrease in the volume of purchase and other kinds of issues that Amazon is facing. So that's on the next week. We are also going to see household prices and household purchases. We are also going to see some bad news on that front. So therefore, that's not going to help with rising mortgage rates. And the third thing that one is going to see is the consumer sentiments. We will begin to see the consumer sentiments. The consumer sentiments right now points to a recession. People are factoring in that US is going into a recession. So this is some of the data. So what's the positive news? It's all negative. What's the positive news? The positive news, which is why you are seeing some what you call tea leaves or green shoots, emerging, is that there is a hope that within the next few weeks, when the midterm elections are held, that there's a possibility that the Republicans will take control of House and the Senate, and we may begin to see some different kind of fiscal and economic policy changes emerge or forced coming out of the Washington, D.C. circuit. So that is the hope that the markets are anticipating as far as the next week is concerned in terms of what is to come. Now, with regard to Mr. Xi Jinping, we will probably do in the daily global insights, that is my perspective. I think he is going to come back very strong, and he is going to have most of his people, henchmen, if I have to use the phrase, holding positions. And he has fired already the first salvo. The first salvo that he has fired is that Taiwan is non-compromisable, and basically indicating that anybody who is trying to interfere inside and outside from Taiwan will be dealt with, because this is a China issue And look at the Hong Kong, they have integrated, these are Xi Jinping's words. But having said that, how long his luster will last with regard to this remains to be seen, unless he wants to create self-destruction. Why self-destruction? He's already self-destroyed his aspirations to be a tech player with an exodus that is happening. He's already losing on the chip side. He's lost out on the 5G side. He is probably losing also on the technology access to the defense. So he's not on a winning momentum, at least from an external markets point of view. That's my observation on China, Sriji.
Thank you very much, sir. I think you echoed my thoughts too. And we thought that there may be a more kinder, gentler general secretary, but it's not going to be. And I guess there's not much we can do about it. They have selected who they think is the best person to head them through the upcoming crisis. And I think he would be very stupid to invade Taiwan. But if he does, well, who knows what's going to happen. Thank you very much, Sridharji. Viewers, please like, share, and subscribe to our channel. Do send in your comments. I see a lot of comments today. One of the good comments that they said was, people during times of recession go to gold, and how come that is not happening? That's a question that Sridharji will mull over and answer tomorrow. We're out of time today. Please do feel free to donate to us using the super thanks button, and also please share this video to all your friends. There's a lot of work that goes into this, folks. And I can't tell you, we take a lot of pleasure in giving you all this information. And I hope that you can reciprocate by just doing two things. Share our links and also put in your comments. Thank you very much, sir. Namaskar.
Namaskar. Thank you so much. Have a wonderful week, and hopefully better news holds as we start the week and finish next week, and better things to report next Sunday.
Yes, sir. Thank you so much.